So we were talking about the spot Bitcoin ETF in our committee group this morning, and an article popped up I'm going to share with you right now. According to Bloomberg analyst Eric Balkunas, the Grayscale Bitcoin Trust is going to open up with $27 billion in liquidity and over $350 million in trading volume. That's going to give Grayscale the advantage over other ETF managers like BlackRock, Invesco, Fidelity, the list goes on. But why is that important? Well, you got to understand history. Grayscale has been here since 2013. They were one of the first to offer any form of institutional investment product strictly focused at crypto. And the whole process that brought us here actually involved their conundrum, their fight with the SEC last year that got wrapped up in October. The whole thing was centered around the conversion of their Bitcoin Trust product into the spot ETF. So if they're in a position to have a major advantage over this ETF market, and all they needed to do was convert their existing trust into an ETF product, then I think you might be interested in the list of other crypto-related trusts that Grayscale has. And if it does have the advantages that we're going to go over in this story, then yeah, altcoin season is going to be unlike anything we've ever seen. So let's just dive right into this. Now, first and foremost, shout out Ian Allison for this opening sentence. In the universe of exchange-traded funds, size matters. And in the world of spot Bitcoin ETFs, the giant is Grayscale Investments, which, if approved by the U.S. Securities and Exchange Commission, which we know it was, would come out the gate with more than $27 billion of assets under management. Now, this was published on January 8th, so everything that's going to follow applies immediately. Now, David Lavelle, global head of ETFs at Grayscale, he said that we have a massive differentiator from any other product that is going to come on the market because we have over 1 million investors and hundreds of millions of dollars in trading volume on a daily basis. And that will continue once it is approved to be uplisted to the New York Stock Exchange. So that millions of investors and hundreds of millions of dollars in trading volume, that's all hitting the market right now. And we're going to take a look at the current market prices too, and you'll see that all of Grayscale's asset holdings, they're all up double digits with the rest of the market. But Sue Chung, CEO of CF Benchmarks, the crypto index provider, she contributed more insight to this because, again, this originally was the Bitcoin Trust. And because of that, there was a number of people who bought GBTC units betting that it will become the ETF. So they buy the discount, betting that once it becomes an ETF, they can redeem the net asset value and just hover up that profit. So it's hard to say how much AUM that will be, but it's likely to be a decent chunk. The thing is, right now, people are already in profit. Are they going to sell it though? Well, technically they can't because there are certain conditions that came with the trust. It still has to be ironed out now that it's been converted to the ETF, but upon day one, people are already winning, right? And again, Mr. Balkunas gives us the idea on those numbers. Opening day with over $20 billion in liquidity and $350 million in daily trading volume is like bringing a gun to a knife fight. Any of these products would kill to have that much money in like 3 years, let alone the first week. If Grayscale is able to convert on the first day outside of BlackRock and Fidelity, it's going to make it really hard for others. Guys, that indicates to me that Grayscale is running this ETF market. And if that's the case, then any decisions that they go to make, it's going to have a ripple effect on these other ETF managers. And again, they've been in the business since 2013, guys. And if we take a look at the markets, this was from about 10:30 this morning, double-digit gains across the board, like I said. And if you look at everything that Grayscale is holding, it has been up substantially in the last 24 hours. Now, I also want to show you this. Let's look at those BTC holdings for Grayscale, 619,000. And the blue line does indicate selling off, but you got to zoom out because these metrics go back to 2020, 2021, around the time when this all first kicked off, right? Just this chart here. And they've only sold about 40,000 since 2021. You got to pay your overhead. So that doesn't, to me, it doesn't look like they've been dumping on the market at all. And then another thing to consider, this cash create model, which was the redemption model chosen for these ETFs, it doesn't allow, it removed the need for these ETF managers to have to buy Bitcoin to exchange for the shares. It's all cash now. And that will open up the door for them to buy more Bitcoin to support the liquidity as more customers come in. Or they could just sit on the Bitcoin they got, wait till things settle down in a few months, and buy more Bitcoin to support the liquidity. Either way they decide to do it, what's important is the redemption models here. We're going to revisit the situation with the SEC back in October, right? Because I learned a couple details. Is that, again, this case is what allowed them to convert the existing trust into the spot ETF. They called it an uplisting. That's the term there. Learned something new today. Now, in October, it was only worth $17 billion, but according to CoinGlass, we're looking at about $28 billion. So all of that got me to thinking, all right, maybe the problem is there was already enough money in these products, right? When you look at the list of companies who are offering these products, they may have already had a substantial amount of Bitcoin on the books. So buying more Bitcoin, having them being forced to buy more Bitcoin would have just added more pressure on the market. So I think that had a large part in the decision-making process over in-kind versus the cash-only model. So with that line of thinking, what about the other ETFs or the other products that Grayscale has, a little bit less value, right? Let's take a look at this here. Grayscale's holdings, 2.9 million for ETH, about 7.6 billion in volume. I could see that one ending up being a cash-only model. We'll certainly know by May. But if you look at some of the smaller assets, Solana, 24 million, could easily be in kind. XLM, 8.9 million. Decentraland, 8.3. You don't think don't for a second think that the metaverse is going anywhere. Davos is coming up next week, and there's an entire day dedicated to Web3, the metaverse. All right, don't get me started. And then you can see another small cap altcoin, Zen, 4.8 million. There's a brother in our committee group who is a Zen maxi, but I'm okay with that because Zen is a good project. It's a really good project. But guys, at any point in the future, they could just uplist any of these other trusts. All right. And each one of these assets have an individual trust. That's the process here. Now, when you look at the other products that they have, it includes even more assets. And again, I'm assuming that the uplisting can be applied to these as well. You have the Grayscale DeFi fund. That includes assets like Uniswap, Aave, Synthetics, and then the Smart Contract Fund that includes Solana, Cardano, Avalanche, Polkadot, and then the Large Cap Fund, which XLM used to be included, and they got removed not too long ago, but XLM has its own trust. Keep that in mind. But this one includes Bitcoin, Ethereum, and your XRP. I've been hearing a lot of whispers about a potential product different from the one that already exists on Fidelity. This would honestly open the door for an XRP ETF that is directly related to the buying and selling of XRP. That's how we would get there. All right. So major implications for many asset holders if Grayscale decides to press the gas here. And I think they will because of all of the advantages. There was another advantage they mentioned in the article. I didn't highlight it because it talked about taxes, figures that was boring. But basically, even though Grayscale's fees for their ETF are higher than BlackRock or Fidelity, there's something that gives them a tax advantage over theirs. Not quite sure what that is. It didn't go that deep into it in the article. But hey, I already know if there's a tax incentive on top of it, yeah, Grayscale is going to have a lot of influence. So I don't see this unfolding like quickly. This could take some time. Like I said, in May, they're going to open up the Ethereum ETF discussion. And if that goes through, you can pretty much guarantee altcoin season starts that day. All right. And then here's another reality. All right. In January, we did the Bitcoin spot ETF. Everything was cool. The world didn't collapse. So we did it again with Ethereum in May. Same story. Everybody was all right. So which one can we do for December? You never know. That's the type of scenario here. So I was so interested when we were having that discussion this morning. And then another thing that we were talking about in the committee, I haven't even included the other companies here that are ETF managers with crypto holdings. I do remember distinctly last year, BlackRock getting very close with a certain energy web token. And like I said, Davos is this week. And on the other side of the metaverse panels, the rest of them are about the environment. I mean, hey, listen, guys. We got this ETF. Markets are pumping. Yes, that is very true. But there are still things going on behind the scenes that you got to pay attention to, because it's like this. We're pumping now. This is the money that we were positioning ourselves for back in October. This is going to pump. It's going to pull back. It's definitely going to pull back. Okay. I'm thinking closer towards the beginning of February, because as we get to that halving, we're going to have a lot of volatility. So with whatever price point we hit by April, that's where we're going to start our retracement from. I don't see it being like a massive correction. We're not going back into a bear market. Absolutely. With all of these products on the table, no way. Right. But typically what happens with a halving is that the price does pull back 10-15%. So if we get up to 55 before then, we would just be falling back down to where we are now. However, the catalysts and the events that will set us up for that second half of the year rally that typically takes us to all-time highs, those events are happening right now. So, got to keep our eyes open. That's the news, though. Let me know what you think down in the comments, guys. How big do you think this is going to get? Also, if you're looking to get some crypto, I'm using Uphold right now. Links to that will be in the description. With that, you know what I want y'all to do. Have a great day. Have a prosperous day. And always remember, if the money is digital, so is the hustle.